Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, March 20th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, overall, we're in a correction, but tech is rallying. Lagged today, but really it's a case of it just getting a little bit too extended. Some money being taken off the table there. Lagged and was red for most of the day. Also lagged at the close, but closed at the high of the day. So net, I'd consider it a positive for the NASDAQ 100 and tech stocks. You can see over here on the trend gauge, leading stocks flagged as, excuse me, as neutral, with green arrow as they're holding up just fine. Short term, uh, four of the five major indexes below the 21-day short-term trend moving average, NASDAQ 100, the standout, as it's been leading for over a week, well over a week. Medium term, same situation, all under the 50-day moving average except the NASDAQ 100. Long term, we've got the NASDAQ 100 above the 200-day moving average. The S&P 500 has been playing ping pong with that level over the last week, closed back above it today. Not a lot of confidence that it's going to stay there, but really the deciding factor will be what the Fed says on Wednesday and how the market reacts to it. So we're showing neutral long-term in aggregate uh, for the five major indexes. As far as what happened today, over the weekend, UBS, I don't know if it was a shotgun marriage, but they agreed to buy Credit Suisse with a big heavy dollar input from the Swiss government. And the end result was that stocks gapped up when the futures opened last night at 6 o'clock Eastern time. Middle of the night, we were down over 1.5%, and it looked like there was going to be a lot more work to do. By the time I woke up, we were about flat. We ended up opening mixed, and we closed green. So bottom line, I'd say stocks shake off bank fears. S&P 500 back above the 200-day moving average. Here are the numbers on the day. G6 up 0.84%. S&P gapped up 0.25 by the open, ended up plus 0.89 by the close. NASDAQ 100 gapped down 0.25 at the open, was down as much as 1% during the day, but closed at the high of the day, up near the high of the day, up 0.35%. The Dow led the big cap indexes up 1.2%. Mid caps rebounded, but not as good a rebound as you might expect, as the banking indexes gapped up, still finished green, but well off their highs. Mid caps up 1.7%. Russell 2000 up 1.1%. Global diversified 60/40 stock and bond up 0.44%. Global bond index down 0.35 on the day, which means rates rising, which actually means lack of fear, or getting maybe more toward what they think the Fed's going to do. We really won't know that for sure until Wednesday. This is the first Fed meeting where there's not really uh, a clear thought on exactly what they're going to do. So expect some fireworks after 2 p.m. Wednesday. In-house GROTECTION, we're up 0.25%. Let's get to the charts and the tail of the tape. First, let's do an explanation of why we do what we do here at Revere. Here's the S&P 500. We are active investing trend followers. We monitor the five major indexes and where the price is relative to three time frames. That is the short term green line, that's the 21-day moving average. The medium term red line, that's the 50-day moving average. The long term black line, that's the 200-day moving average. Ideally, we have price above that and them stacked short term above medium term above long term, but we haven't seen that for quite a while. Let's say about 15 months. And the reason why we're so concerned about that is because all bear markets occur when you're under that big ugly black line, the 200-day moving average. and that's where we've been for the majority of 2022. Got back above it at the beginning of 2023 here. We've been battling with it with this banking crisis that kind of came out of the blue a week and a half ago, and we know that that's the time to be defensive. In this case, we had a little bit of bifurcation where tech held up fine. It was the financials, oils, things kind of that wouldn't do so well going into a recession, like basic materials and industrials that had been leading to the downside. But we know when to get defensive. We've been focusing on what's been working, which is basically FANG type stocks, software stocks, semiconductors. And if you're interested in an approach like this that protects the downside but participates in the upside, reach out to me, Don at revereasset.com, or my partner Dan Stewart, Dan at revereasset.com. Dan's a snow bunny, just got back from a nice vacation, so he's ready to take your calls at 855 Real Wealth. That's 855 732 5932. Let's go to the 50-day S&P 500 here, and you can see Thursday above the 200-day moving average, back below it on Friday, back above it today. Rallies of the last 3 days contained by the downtrending, but now flattening 21-day moving average. So now that we're 6 days up off of the low, the shakeout low, which was 313, best thing that we want to see the bulls do is bust above the 21. I'd hate to see it tomorrow before the FOMC. I'd hate to see a fake breakout and then a big breakdown, depending on what Powell says. I'd prefer a nice little tight. We don't get what we want, do we? But hey, if I'm putting in an order, I'll say, how about a nice tight inside day tomorrow, hanging right below the 21, right around the 200-day moving average. Not that the market cares one little bit what I think or what I want, but that's what I would be looking for. Today, I consider a win for the bulls. Let's go to a 5-minute chart here, and we've got a little bit of a gap up on the S&P here. Nice morning rally up to 39.56. What's above 39.56? Well, above 39.56, let's go to the tail of the tape very quickly. That's where the 21-day moving average is. It's coming down. It's been coming down for a while, and it's flattening out. It's at 39.65 now. Let's look at the 200-day moving average, 39.36. Back to the 5-minute chart here. We've been playing you can see where we pulled back right to 39.35 in the afternoon. This was, to me, a very positive sign. So afternoon, we got above the 200-day moving average. We broke down. There were some fears on this relative to that bank FRC, which seems to be getting most of everybody's attention in the US anyway, about their liquidity issues. But we broke back below the 200-day moving average, but quickly reclaimed it. Remember, 39.36. So we're back above it within an hour of breaking it. That's exactly what you want to see. But then we got up to 39.50, started to test it again. We tested it here, and we held. So 39.36, the 200-day moving average, held on the afternoon pullback attempt, and then we rallied into the close near the highs of the day. So two levels that we're focused on right now, 39.36, which is the 200-day moving average. Look to the left, and you can see how many times 39.36 has been either support or resistance over the past 3 days. And then on the upside, 39.56 to 64 has been a resistance area. Right above there is the 21-day moving average. Tomorrow it'll be probably down around 39, 60-ish, maybe 63, 64. It's flattening out, and then it'll start rising. So if price breaks back above. So there's the 50-day moving average. A lot going on here. Did get back above the ADMA again, but we got back above it on Thursday also. So far we can't handle more than 1 day above the ADMA before we give it back up. So we'll see what happens tomorrow. Very close, as I said, to the declining 21-day moving average. Now let's look at the champion right now, which is the NASDAQ 100 above its 8, above its 21, which they're both above the 50, which is above the 200. This is exactly the way you want it configured. The only fly in the ointment is that we've We're actually flat now, uh, basically flat on the 200-day moving average of the NASDAQ 100. Nice pullback in the morning, nice close at the lows. Let's go to a 5-minute chart here. You can see the gap down, rallied along with the rest of the market, the sell-off along with the rest of the market after that news about FRC needing more bailout money came down to the 303 level, bounced off there, closed near the high of the day. Uh, Nice 2-day consolidation, I'd say, for the NASDAQ 100 after the way it's been leading. Relative strength took a little bit of a break today, but look how strong it was over the prior week and a half. This is a really nice looking flat base. I'd like nothing more than a strong breakout above it after we get FOMC out of the way Wednesday, and then the overnight reaction into Thursday is going to be critical. Let's go to the Dow Jones Industrial Average, which has been the laggard of the big cap indexes, now about 8 or 9 sessions below the 200-day moving average, but tightening up. Showed some relative strength versus the S&P today. So let's, hanging right around that 32,000 area. Mid caps, which got absolutely hammered as part of this banking crisis, also trying to tighten up below all moving averages, as is IWM. Small caps below all moving averages. Here's what I didn't like to see today. KBE, this gapped up. Look at a 5-minute chart. It has bigger banks in it, the bank index. You can see the gap up and rally, and then broke below the open, rallied up near the open and failed, closed near the lows of the day. Still finished positive, but that's not the action you want to see. We need to see some strength come into the KRE and KBE. Here's KRE, a little bit weaker on the overall chart, but kind of the same intraday. We need to see some strength come into this and show some confidence back in the banking system. Let's go to XLF, which quite a few financials in there. Obviously, this is tightening up and kind of holding that 31-ish area. I'm going to set alert at 30.50 just in case I'm blind for some reason tomorrow, but you see a lot of support there back in September, October, back in July, back in June at this 30 to 31 area. So this would be a time for a goal line stand for the financials here. Also note we've been oversold territory going on 4 weeks for XLF. So what's next? How about the dollar, UUP? conti- Third straight down day coming into this 28 area. Really, this has just been a tight consolidation between 28 and 29 for the dollar, playing ping pong versus the 21 day, which is flat, which means there's no trend there, staying above the 50-day moving average, headed towards oversold, which is not good. We want not good from the standpoint. Well, I mean, I say not good, but look, back here we came into oversold and we stayed oversold for 5, 6 weeks as the dollar trickled lower while the market headed higher to sideways for the most part. So uh, we really haven't been paying as much attention to the dollar. That's really been a headline driven as far as what's going on with the various banks. So uh, all we know really is that the weaker dollar, has been helping gold, as well as the lack of confidence in the banking system has been helping gold and Bitcoin. Here's the VIX. It's forming a tight base here at an elevated level. This 24 area, we spent a long time below 23, 24. Now that's the support level kind of for the VIX. 30 on the upside. Bulls want to see this break back below 23, break back below the 21-day moving average to give a little bit of a tailwind to stocks. Let's flip to bonds now. BND, the broad bond market index, down on the day, which good means rates were up a little bit higher, which at least means that there was no panic money flowing into bonds the way we saw late 2 weeks ago and most of last week. Let's go to corporate bonds. AAA, consolidating tightly up at this 50 and 200-day moving average, approaching overbought. JNK junk bonds continue to head lower. TLT, the 30-year, consolidating around the 200-day moving average. From a yield standpoint, TYX 30-year Yields up 1.8% on the day, holding this 200-day moving average. 10-year yield TNX 2.5% on the day, really in this tight range for most of the last 5 days, this being the one outlier when we thought things might be okay. On the 14th, the next day, the 15th, we gap down, and we're continuing to struggle in this area. Uh, Rates oversold, meaning the bond indexes are approaching overbought. So really, again, it's a confidence game at this point. FRC is the problem. That's First Republic Bank. Uh, Jamie Dimon, look at 1,000% above average volume today. Let's look at this on a 60-minute chart, and you can see how ugly it really is. So this was a stock that traded between 140 and 120. First it gapped down, then it gapped down a lot. We're okay. Again, this was on the 10th when we thought things were fine, but no. Massive gap down on the 13th, and now even making lower lows despite the big injection of money from big banks last week. 11 big banks putting in $30 billion. Jamie Dimon today trying to head up the group to get more money into this bank, First Republic. Not sure why he's so fond of it. My guess is that he's being a mercenary and wants to pick up the assets for pennies on the dollar. But anyway, FRC down 47% on the day after being down 33% on Friday after their supposed bailout Thursday night into Friday. So I say supposed bailout because the bank not acting like it's got sufficient liquidity. It's not actually I'll say it's not trading like it's got sufficient liquidity. Let's flip over to precious metals. GLD up again on the day. We bought this breakout on Friday, holding tight today. GDX another higher high on its recovery, up 1.73% on the day. SLV up 0.29. These all coincide with these all coincide with the weaker dollar today. Dollar down 0.57%, and Bitcoin up another 3% on the day, second higher high, as this is getting the benefit of market fears, money flowing into Bitcoin. Let's go to the tail of the tape here. You can freeze this to read the whole thing. I'll hit the highlights. FOMC Wednesday really is what we're looking for. Rate hike odds. No hike, 23%, 25 basis points, 77%. Some people saying they should cut 25 basis points. That would probably start a panic since it's something that's not expected. Day count from down one to up one. First day above the ADMA on the S&P 500, 10th day below the 21 on the S&P 500, got back above the 200-day, so we're neutral on our expectations. Undercut and recovered support on the weakness in the NASDAQ 100. Same thing back above the 200-day moving average on the S&P 500. Here was the action during the day, including the 3-hour cup base into the close. 11 out of 11 sectors led up today. XLK Tech was the weakest after being just really strong last week, led by KBE, Bitcoin, solar, ITA, which is defense, oils and semiconductors. On the downside, we had the dollar, bond prices, and transports. In-house took advantage to get starter positions in 3 stocks we've had our eyes on: First Solar, AMD, and Tesla. We trimmed some SDS as it got oversold during the day. So this took our exposure from 0.54 up to 0.73. I'll review some of these focus charts here next. 4 of these really big NASDAQ 100 charts are looking really good. We're going to take a look at those. Bottom line for today, indexes shake off banking fears. NASDAQ 100 lags but closes at the high of the day. So let's take a look at some of these charts now, and we'll start off with what we bought today. So we exited First Solar last week on weakness at 201 and 207. 1% buys got us back in today as it bounced off the 21-day moving average. So reinitiating our position there. AMD had a pretty decent gap down, but it didn't last long as it started showing strength. We bought 1%, then added another percent. So we've got a 2%. See, is it that 5% plus pivot? Once it pulled back there, it had my attention. Didn't want to buy it extended, but that was a good spot to not so extended to buy a starter in an extremely strong stock. So that's AMD. We also own SOX L still, as semiconductors seem to be the place to be. And then we added Tesla when it broke above the 21 EMA, but it only broke above it for a very short period of time back below it. I like the stochastic setup though. I like the tight action and the stop below today's low and or the 50-day moving average. So good setup there on Tesla with a nice tight stop. Now, let's show the other two things that we still own. Actually, three things. Palo Alto up at this 190 area continues relative strength at a new high. This looks fine. It's just chilling as the market chills. ANET continues to be the strongest stock in the market. No give back on this at all. As close you can get to 160 has been the best entry over the last three trading sessions. And we own TMDX, which got back above the 21-day moving average today, trading in a very tight range. This is the illiquid story that we're pretty fond of. And then we own SOXL. We're using the SOX chart to handle that. That looks fantastic. We've got a big position in QLD, which is dictated by how the QQQ chart is acting, and we've got a small position in S&P 500 index fund. So the big four that we don't own, but they're contributing to the great action in QLD and QQQ and TQQQ for that matter, also TECL for that matter, also FNGU for that matter. Anyway, Apple, this just looks great. Let's go back. This looks like a massive inverse cup and head and shoulders, left shoulder, head, right shoulder. This 158 area has been acting as resistance going all the way back to September of last year. We break above 158 with some volume. That's going to certainly help the indexes, including QLD, like I said, which we've got a big position in. Microsoft, looking to be a big beneficiary of AI, broke out but came straight off the bottom in its breakout. Very normal to see it pull back 2.6% today, back below the pivot of this flat base. Flat base you really don't want to see come straight up off the bottom when you break out of it. So this handle is actually pretty welcome to see. Look at how the volume has increased from day one to day two to day 3, 4, and 5, and then lower on the pullback. Perfect volume patterns on Microsoft. Next up, Meta formed this nice base. Uh, this is more how you want to see a flat base work. Go up, pull back a little bit. 3 days up, that's just a little too much. Really, it was the fourth day up. So second pullback day, back below the pivot, reclaimed the pivot by the end of the day, bounced off the 80 EMA. Perfect action here on Meta and all of these. And finally, NVIDIA, 4 of the top 7 in the NASDAQ 100. NVIDIA on the pullback to 250 would have been a nice buy today, but we added AMD, and then we also have the SOXL. But these things leading in AI, uh, NVIDIA has chips in basically every big growing sector. Um, was in hindsight, of course, wish I didn't sell my shares on this shakeout day last week, but it got back to break even, and that was just one of the rules I have when you have a decent gain and it goes back to break even, don't let it go red. But we did get into SOXL, which has more than made up for this NVIDIA bouncing. This is just a perfect entry. This is the day I sold it, was on the 10th. And then the undercut and reclaim of the 21 was really a perfect entry, but we don't cry over spilt milk. And that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We're set up. We've got footholds in 6 of the leading stocks. There's a couple of others. We don't really want to own more than 8, but we've got nice small positions. If things line up positively with the Fed on Wednesday. We're ready to roll. We've got nice gains in the QLD that we've been buying, and but we've got contingency plans either way. We've got our stops in place to the downside to protect profits, or cut losses, or hedge what we have while the market shakes out. So, as I said, always welcome your feedback. Give me a shout. And with that, I'm going to wrap up Monday, March 20th. This is Don Vandenbord telling it like it is. Thanks for listening. Have a great day.